Put the money in. So this is the big thing we want to talk about. You got to get the money in. The deadline's here upon us.
But you have to do it by September 15th if you want the write-off without getting into problems with the IRS. So that's what we're talking about today.
Welcome everyone to the Directed IRA podcast. This is Matt Sorensen, joined by the incredible Mark J. Kohler. We are stoked to be with you today, but we got some deadlines. You got some crap to do, and we got to hit it fast and hard because.
And folks, all we're trying to do is save you money, make you rich, get you tax write-off. And there's a little bit that happens behind the curtain. If you remember Wizard of Oz, you get there, you see they pull the curtain back, and this guy's going nuts. There's all sorts of levers and pulleys and all this stuff. You'd like to just call your accountant and go, I want a solo 401k. Make it happen. Bye. And then hope it just happens. There's a few things you got to do.
Yeah, like put the money in. So this is the big thing we want to talk about. You got to get the money in. The deadline's here upon us. For any of you that are S corporations, this is the entity of choice for our small business owner clients. Mark's an S corp. I'm an S corp. We love S corporations. September 15th. Like, I know we're getting this out maybe a day before the deadline, but we want to get it out there. You got to know it. Make sure you're following our newsletter. You should have already heard the message on this. And the cool thing is this is for 2022, guys. We're talking about 2022 and still getting tax deductions.
All right. I love it. Okay, now let's get some basics out there so everybody's like, all right, what the hell are you talking about? Okay, I'll start with a couple basics, Matt, and then let's unpack this. For any of you that owned a business in 2022, you can still get possibly, I want to give you the criteria, you can still get a 401k deduction in your small business, depending on certain criteria, for even last year still. This is incredible, but we'll come to that. But the first thing is, if any of you had a small business in 2022 and you set up a solo 401k, which are the creme de la creme, they're like next level IRA Roth planning, old school SEPs, hate them. But if you set up a solo 401k last year, whether you're an S corp or sole proprietor, that's going to play out here in a moment. But you got the benefit of not having to put in the money before December 31st. You didn't even have to do it before April 15th. But you have to do it by September 15th if you want the write-off without getting into problems with the IRS. So that's what we're talking about today, and unpacking that.
Yeah, and for any of you that are sole proprietorships, you have until October 15th. You've got time. Even if you never even set up the solo 401k plan, one of the law changes at the end of last year, this is one of these late Christmas presents Congress gave us, was that you can set up a solo 401k in 2023 before your tax return deadline, which if you've extended until October 15th, this is you, listen up. You're a sole proprietorship, you can still even set up the plan and get the money in by October 15th. Now the S Corps, it's a little more tricky, but the sole props, for any of you that were sole prop for 2022, this window is still open for, another 5 or 6 weeks.
Yeah, and putting that in perspective, many of you regretted not getting your S Corp done for last year. And so in 2022, your single member LLC, engineer, consultant, online influencer, realtor, whatever, but you had a single member LLC last year and no one told you about the S Corp. And so your taxes are going to be a little higher. You're hating it. Hopefully you've solved that problem. Get with one of our tax lawyers to get you into an S Corp this year in 2023. But in 2022, you might be licking your wounds because you didn't make the S Corp. But the good news is you've got another 5 weeks until October 16th, October 16th on a Monday, to create a 401k. We have that service here that can knock it out quickly, efficiently, and you can put quite a bit of money away now and get the write-off on your return for last year if you're a sole proprietorship. We'll come to the S Corp in a moment, but Matt, how easy is it? What's the cost?
Yeah.
Just so people can kind of know how much work it is if you were a solo,
Yeah.
an LLC, a sole proprietor last year?
Yeah, so we charge $995 to set up your solo K. $995 in the law firm. We have a pre-approved solo 401k plan document with the IRS. You can self-direct. You're not like the Schwab plan where you have to buy stocks, bonds, and mutual funds. We got the real solo K that you can do what you want to do. And then as an annual fee, it's $395 per account in the solo K. And you have that at Directed, and we do custodian of it. We do the statements. We do any 1099s if you do a distribution or a Roth conversion. We do your 5500 for you if you need to have one. So, but that service is all coordinated between our law firm and Directed. Now, you could put in $61,000. That was the number for 2022. $61,000 in contributions. And I want everybody to understand how these contributions work. This is whether you're thinking about this for 2022, 2023, 2024, I don't care what it is. But remember, there's two ways you get contributions in here. And as we're thinking about the deadlines, I think it'd be helpful for me to explain this just so everybody knows going forward if you're not in this rush right now in the last minute. I still want to expand on it if that's okay.
Yeah.
All right. That's $61,000. Let's break it up. You have employee contributions because in a solo 401k, you're an employee too. You're also the business owner. And so you're going to contribute as owner of the business to yourself because you are such a great employee under an amazing match. So we've got employee and employer contributions. There's two buckets here. They're going to add up to that $61,000 for 2022, $66,000 for 2023. Now for 2022, I'll just stay on those numbers because we're talking about the deadline here. You can put in $20,500 as an employee. If you make $20,500, you can put in $20,500. It's dollar for dollar. If you made 10 grand, you can put in 10 grand. You made 100 grand as an employee, you can put in $20,500, all right? Every dollar you make, that's essentially how it works, what you can put in. Now, this is why we love the solo K. I also get to match because I'm such an amazing employee. I'm such a good employee, and I want to reward myself with the most aggressive match possible. You can do it in a solo 401k. The most aggressive you can do is 25% of whatever your employee wages were. So this is your W-2. So if you made 100 grand on your W-2, I'm just doing that so we can run with the math easy. That's 25,000. I can do 25% of my W-2, 100,000. 25% of 100,000 is 25 grand. That's in addition to the 20,500. All right. So
Now,
that's how it adds up into getting this in.
and for last year, if you were 50 or older, you could put an extra $6,500 in. So that ends up being 27,000 plus the 25 in Matt's example. Now, for those sole proprietors out there that you had a single member LLC, you were just running your business as an LLC because you thought that was the way to go. It's 20,500 or 27 based on your age, plus 25% of your profit in your Schedule C.
Yeah.
So that's the math.
Yeah.
And
on the sole prop, if I can just interject, they have a weird formula on that. It's
That's right.
25%, but you do take a little reduction. It basically comes out to 20%. You know, there's actually a worksheet you're supposed to do on this, but really, if you just run 20%, that's going to hit the number. So just for the sole props, run on 20%.
yeah, so let's say some of you are just wrapping up your 1040 and you're like, hey, I want to get this done. And your accountant calls you and said, oh, it looks like you owe 40 grand for last year. I'm sorry, you have 40 grand of income. You've got self-employment tax of 15.3% on 40,000. So that's going to be around 6 grand plus federal and state. You can say, well, I heard on the Directed IRA podcast, I can still do a solo 401k for last year. Your accountant may know this, I may not. So you could do 20,500 plus 25% of 40 grand, which would be another 10. So now you just got a write-off on your return for 30,000 and change and reduced your taxable income to 10, which just saved you 15 self-employment tax wise. That just saved you close to 5 grand, 4,500 to 5 grand. And so you saved 5 grand to put away 30 grand, which is a big deal, and federal and state tax. So this is a something you couldn't do last year. But now you can for you LLCs out there that were not an S Corp.
Yeah.
So
Or
the
even
deadline to do that is October 16th. We're going to come back to S Corps now in a moment. But I don't know, Matt. Would you add to anything to that?
Yeah.
That's kind of the
And I just say any sole props. You didn't have an LLC or just Schedule C back in 2022, and you want to grab some of these deductions. The other thing I'd say too is remember, when Mark's saying you're getting tax deductions, these are going to be traditional dollars. And you love it now because you're doing your tax return right now and you're like, man, I want tax deductions. I don't want to send anything to the IRS, maybe even trying to get a refund or something. But if you have the discipline, go Roth. We love Roth. Do the Roth contributions. You will not get the tax deduction, but you are getting the money in. And that's the thing with the deadline too. It's not just chasing the deadline to get the tax deduction. It's also to get the money in, because I've only put so much money in every year. And if I'm not on the ball, I miss that window to get the prior year's contribution in. It's like right now, you're sitting, if you were a sole prop, or even if you're on the ball here in the next couple of days with your S Corp, right? You could get potentially, depending on your income, 61,000 in for last year and 66,000 in right now. Like I could be putting over 120 grand in right now for getting 2 years of contributions if I had the income in those years to pull it off. So that's pretty cool because there's only so much you can get in. Making sure you're on the ball with the deadlines. Also make sure you get enough enough arrows in the quiver. I don't know what you mean. Fuel in the tank. You know what I mean? You got to get the dollars in.
Yeah. No, I think it's just absolutely astonishing what is really possible. And let me just give an example here of putting away that 30,000. If you can do that for 10 years, you say, I'm just going to knock that out for 10 years, 30,000 a year. And you may be doing real estate and some other investments, and the compounding interest factor and the rule of 72 is absolutely astonishing. Now, our clients are, when they self-direct, are averaging 15 to 20% returns because they're doing alt assets. You've got to check out our altassetsummit.com. You can buy the recordings from the last event and start learning how to get better than Wall Street, where it's 8 to 10% if you're lucky. I want to get 15% or more and invest in small business and startups, notes, real estate. But let's just go with an average of 12%. If I can do that 30 grand at 12%, in 10 years, I'm going to have over 600 grand. Boom. For any of you in your 30s or 40s, you start doing a little bit of this with your Roth, with your spouse, a little extra on this. Within 10 years, you could have $1 million sitting there tax-free. So the tax deduction's nice, but I'd rather be sitting on $1 million 10 years from now. And a little extra work can really catapult this thing and snowball it.
Mm-hmm. So let's talk about your practical steps right now on getting the money in, because you have to put the money in. And so if you have an account at Directed and you did what we have, a custodial account, it's going to be recorded into your account, on statements. It's going to be on your account when you log in and look at it. You've got to process it. Now, as long as we get the check, and actually as long as it's postmarked, because we keep the envelopes on the deadlines. When the deadlines are rolling, we keep the actual envelope. So even if we get the check a few days later, as long as it's postmarked by the deadline, we can accept it in and we'll deposit in your account even if it's a week later. Obviously, wires and ACH, it's just going to be the date it's received, and a lot of people contribute that way. So just practically know you got to get the money in. Now, for those of you that have a trustee checking account, you have a checking account in your Solo K, which is great. It's fine. You can totally do that. You just make sure you're going to have to show the deposit in your statements. You know what I mean? That's easily auditable by the IRS to determine whether you hit the deadline or not.
Okay. Now, for those of you that are S corporations, to quote the infamous 1982 Poltergeist, they're here. And that is the deadlines for the S corporations. Oh, big deal. So in 2 days,
I don't know what's more scary, IRS deadlines or Poltergeist.
Yeah, I know, that was a good one. Oh my gosh, so good. So September 15th, this Friday, is the deadline to put the money in your 401k if you were an S Corp. Now let's go back to Matt's example of the employee in a paycheck. If you had an S Corp in 2022 and set up a solo 401k, we'll go with that example. Then Matt, you can give the example of I didn't have my solo 401k set up last year. If you set up your solo 401k last year, then there's a really good chance you were Johnny on the spot, and in your W-2 to yourself that you issued in January to yourself out of your S Corp, which if you have a decent tax advisor, which our Tax Pro network would never let this fall through the cracks, you would have indicated on your W-2 how much you're going to defer. Am I going to do the whole 20,500, the 27,000? Maybe I'm only going to defer 5 grand or 10 grand because you know you can still do a Roth on the side. So, but in my 401k S Corp, you would have indicated how much you were going to defer. And here's the beauty. Your advisor would have told you, let's put it on your W-2, but you don't have to put it in right now. And you're like, oh my gosh, that's great. I'm going to set a goal. I'm going to put away 10 grand. Okay, cool. And then you say, well, how much can the company match? 25% of whatever your total W-2 is, gross wages box 1. And you're like, okay. So, but your accountant advisor tells you, you don't have to worry about this until it's time to file your return with extensions. They're here in 2 days. So you want to say, okay, now it's time to put that 10 grand in and up to 25% of the payroll. You get to choose. And your accountant's probably trying to finalize your 1120S tax return right now and get that off. You've got to put that money in a custodial account at Directed IRA, which you could call right now, directedira.com, and say, I need a custodial account. I got a 401k. Hurry, hurry, hurry. And they'll set up that custodial account. Or you got to take your 401k binder you got from whoever you bought it from. We give this on a silver platter to our clients, and go down to Wells Fargo and open up a bank account for the 401k. Don't tell them you're opening a 401k. You're just opening up a trust account because they'll get confused.
Yeah, but I'd go to Titan Bank or someone that knows what the heck this is.
Yeah, we got some referrals there.
Yeah.
So then you open, so your 2 methods, and I'll be done, Matt. 2 methods. For those of you that had a 401k last year in your S Corp, you put a designation on your W-2. You get to open a bank account and do it yourself, or call Directed and say, open up an account for me that manages it. It's kind of, so you get statements like Merrill Lynch or whatever. It's your own 401k coming to you with statements tracking it. So those are your 2 options in the next 2 days. If you don't put the money in, you don't get the write-off. You have to amend your W-2 and your 1120S. If you file late, it doesn't matter on this issue. The money's got to be postmarked, like Matt said, in an envelope to us, or deposited in your bank account if you're the trustee.
Yeah. And let me say this too, because sometimes people get confused. Let's say you didn't do the W-2. You didn't include it, but you're like, but I still have the solo K and I want to contribute for 2022. You can still do that. It's technically not a match. We say match, and it's because a lot of people are familiar with that. It's not like you have to put the employee contribution in to get the employer contribution. They operate separately. So you could still get the employer contribution match, without putting in any of the employee contributions. So if you missed the W-2 boat, like Mark was talking about, you didn't get it included, which happens a lot, throw in the employer contribution still for 2022. Now remember, that's going to be a expense or deduction on the company tax return as an employee contribution, retirement plan contribution. So as Mark said, your account needs to know, and the employee contribution, of course, gets tracked on your W-2. So that's the mechanics of it.
Let me pose the question to you. I'll pose the question to you. Let's say I didn't put anything on my W-2, or I didn't set up a solo 401k last year, but I'm an S Corp. What can I still do?
You can still set up the plan and do an employer contribution, but you got like 48 hours, and so that might be a little challenging, frankly, to get the plan up and the account set up. It's possible, but just know you're at the deadline here. Like we're just trying to get the contributions and money in. Obviously right now as the deadline approaches, we want to clarify this stuff. Now, if you were a sole prop, you got the perfect timing right now. You got till October 15th, plenty of time to get the plan going, get the money in, get all the accounts set up. You got plenty of time, depending on when you're listening to this podcast.
I'm wondering, Matt, let's see if we could game this a little bit. If some of you, let's talk strategy. Let's say you come in and go, Mark, I have an S Corp. I didn't put anything on my W-2, but my spouse has a sole prop. Or we have a little family management company where we paid the kids. Yeah. Or I have a 1099 from driving Uber that's just sitting there or whatever. Or I have a 1099 from some company that I was consulting with. That's going to fall on a Schedule C. You can run that Schedule C into a loss, which will offset your other income. So if you have any ordinary income on a Schedule C for 2022, you can still do the 401k and then let the S Corp do its thing, take the loss on the Schedule C and offset your S Corp return, K1. So I think there's in certain
Yeah.
situations, you can game it.
Yeah. You can do a little game there. I like it. Do the, we have multiple employers on the plan because we want to use the S Corp in future years. Right.
Yeah.
And then, yeah, that could totally work. I like it.
Now, if some of you are like, oh my gosh, why didn't I know all this? There's nothing I can do in the next 2 days. Take the time now to make an appointment with one of the tax lawyers and go, all right, let's do it right this year. I want to go in with my head straight on my head, not crazy. How can I don't want the exorcist with my head spinning around. I can deal with
Yeah.
poltergeist, but I don't want to go exorcist level.
Yeah.
Can I get my solo 401k set up for this year and really game it and talk about Roth and all that? Yes, this is the time. You want to do it by December 31st so you can play with your W-2.
Yeah, and this is actually the time getting into the last quarter of the year here as we're approaching that where we set up more solo Ks than we ever do. And it's not necessarily people trying to get stuff in for the prior year. I mean, we're in the last quarter. They're trying to get 2023 dialed in and figured out. And so let's get those opened up, make sure you're understanding how to get the contributions in. You're considering whether you want tax deductions or you want to go Roth. There's all those considerations there. But that's what a good tax lawyer is going to do. And that's just part of the console as we're setting up the solo 401k is to get in that with you. You can always self-direct it, of course. You're not just having to buy stocks, bonds, and mutual funds. You can actually buy real estate or private companies or funds or do LLCs. All these cool things we're always talking about here on the podcast can be done in a solo 401k. And let me just say it this way, too. We freaking love the solo K. I know we got into technical deadlines and rules and how much you could put in and computation, and there was some freaking math here, and it might have been like, I don't know. But we love it. If I could do a solo 401k, I would. I love the solo K, but I can't because Mark and I have employees. And so the solo K is an amazing strategy for the self-employed person with no other employees. If you're self-employed with no other employees, it's an awesome strategy. You should definitely be doing it. It is the retirement account of choice for your situation.
Now, with that said, too, do Matt and I participate in a 401k? We absolutely do. It's called a safe harbor. They're still incredible. Matt and I can still put away good money in a safe harbor group 401k, and it doesn't cost you as much as you think with your employees. And in fact, it's a wonderful retention benefit, compensation benefit, and your employees appreciate it. You're putting golden handcuffs on them. They want to be there, part of your company. They know you're taking care of them, yada, yada, yada. But it's still, you're able to do a personal Roth and do it's what's called a safe harbor 401k. Now, if you're in that situation with this and need a group 401k for this year, you have till the end of September. Now, if you get to our website or you talk to one of our new member specialists and you call up and go, hey, I want to get this group 401k done, we'll send you some referrals of where you can do that because we want you to still be able to self-direct it. We want you to have the right plan provisions. We are rolling out a practice group at the law firm to help you do group 401ks in the future. So if any of you are listening to this down the road, please give us a call because we do it so affordably. We've had so many people go, you need to increase your prices. Well, we're here for Main Street. We're not here for Fortune 1000s.
Yeah.
We know the small business owner. We know that it can be expensive. So let's try to keep it tight. So
yeah, and that's what I'm doing. Like, and that's Mark and I, like you said, we have the group 401k that can self-direct our accounts, and your employees could too if they wanted. Usually it's the business owner. I was in Dallas speaking at a conference of dentists. It was a very filling experience. Did you get that? Come on.
I did. That was good. That was good. Very filling. Yeah.
So, but like, they love the self-directed topic, right? And so many small business owners, you're entrepreneurial, you love self-directing, but then you're like, but I have employees. And so the solo K doesn't work. Well, we're creating the solution. We're at the tip of the spear on this. We've been doing it ourselves for a while. We've helped some clients along the way, but now we're really going to start building it out. As Mark said, have a practice group for it. So this is what our commitment to you. We want to make self-directing easy for you. We want to make it accessible. We want everybody able to do it, even the business owners with employees.
I love it. Okay, now last point I have, Matt. Here's my takeaway. I was just talking to a client yesterday that was like, oh my gosh, I don't even know what's in my husband's 401k, and I don't think we've got Roths for our kids. Oh my gosh. And she goes, who's going to help me with this? Do you guys do this? And I go, that's what we do. the next 3 months are crazy busy. You cannot call us on December 15th and think you're going to be able to game this. Right now, make an appointment for middle of October, 1st of November, and say, we're going to have a consult with a real tax lawyer where we figure out how much should we pay the kids? How much should we pay each other? What should we do in our S Corp? Did we do a rental property this year? Or, oh, and I'm going to do a solo K. Do I have to do a group? Are we going to do an HSA? All of those decisions really need to happen by December 31st. If we don't save you freaking 20 times whatever you pay us for that consultation, we've screwed up. Like, we literally love our tax lawyer team. We love to pencil out, oh my gosh, this call, I just saved you X. But do we charge you a percentage of what we save you? No. We hate that value billing crap. We charge our hourly rate or fixed price setups to do reviews, entities, and estate plans, and then pass that relationship and build that relationship onto you. We really want to have that long-term relationship where we just don't take advantage and then spit you out. It's not, there's lawyers out there that'll do that. I don't know if you do that. They can
Really?
be dirty.
No, yeah. All right, everyone. Well, there's an article linked in here that has a lot of these details. If you're like, I don't know how these rules work again, I need to digest that. We have it written out in the article. Make sure you click on that link. We're going to be doing an open forum too in the next week's Directed IRA webinar. Directed IRA podcast. So make sure you're going to go to directedira.com/podcast. You can submit your questions there. We'll be fielding them next week in the open forum episode, and we'll see you next week. Till then, stay calm, self-direct on.